The following is a presentation of TFNN, The Trader's Edge, with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the April 30th, terrific Tuesday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, and folks, I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life, because leading an inspired life, folks, truly, that is what it's all about. So let's go take a look at one of our tools. This is the tool I call the gift of being present. You know, many years ago, I used to say to myself, I've got to get my family to the beach. I've been promising to take them to the beach, and what are they going to say if I don't take them to the beach? And then I get them to the beach, and guess what? Guess what I'm thinking? That's right. I'm thinking The Office, all the unsolved problems, everything that I had to do. So physically, I'm at the office thinking about the beach. And then when I physically get to the beach, I'm thinking about the office. I don't know if any of you have ever had this experience in life before, but if you have, you absolutely know just how insane it is. Now, the lesson is this, and I finally figured out that lesson. The lesson is this: the greatest gift that you can give someone, and that is including yourself, folks, it is the gift of your presence. That's right. You're giving it to others, and more importantly, you're giving it to yourself. Make a play day, and make a work day. If you're going to take off at 3 o'clock to go play golf, maybe some of you out there are going to take off at noontime to go play golf, go start playing golf when you get there, when you get to the course. And while you're at work, just simply work. Don't be thinking about, what you're going to be doing at 3 o'clock or whatever time it is you might be leaving out there. Just simply, when you get to the golf course or wherever it is that you're going, just focus on that. And when you get to those places, especially in this day and age, turn off that cell phone. There is nothing, folks, better than the gift of your presence. And I really do appreciate your presence here today. Let's go take a look at the presence in the marketplace. Really a flat market here right now. Dow futures off a couple of points. S&P future basically flat. Trade down at 1587.50. NASDAQ futures up 1 point. Trade at 28.59. Pretty much flat. You got King dollars up a few ticks. The currency market relatively stable. Gold is up $1. Silver's up 13 cents right now. So we've got a flat market pretty much across the board over in Asia. Last night we had the Nikkei off 23 points. That's a blip. We had the Hang Seng up. Well, Hang Seng was up 0.7%, up 156 points, and the Shanghai was down 1 full percentage point, down 22.20. Over in Europe this morning, we've got the FTSE off 10 points, no big deal, and the DAX is up 0.7%. It's up 58 points, trading at 79.31. Our call-in number is 877-927-6648. Let's first take a look at the daily futures contracts here. Then we'll start getting to some of these stocks here that are popping and dropping, all kinds of earnings reports out. If we take a look at the ES Mini here, it did close above that 1586.75 mark. That is the October 11th, 2007 swing point. We did have a close above that area right back here on April the 11th. It didn't get above. Did not test the April 11th high, which is 1593. I suspect that's what the ES Mini will do, just as the S&P 500 will do, is we'll get up and test the April 11th high out there. So everything really in tandem out here. If we take a look at the NASDAQ futures, NASDAQ futures here getting up over the resistance level by that little downdraft that was created, but still not above the swing point high that would take you back into September 21st. That high, that level, 2871.75. In fact, right now we can just draw a line across the top of that. Give me a moment here to do that. Put that on the chart. Yesterday, the NASDAQ futures getting up to 2871.75. 2871.75 is the number from September 21st when it created that little shooting star candle. No reversal candle here as of yet, at least in the NASDAQ futures. We take a look at the Dow. The Dow itself right now is a little bit weaker than certainly if we take a look at the Dow futures, it's really just right now trading inside the April 11th swing point as well. The low is 14,721. You're at 14,743. Says, okay, it's going to go up and test the high, 14,823 out there. That's what the futures are saying. Let's go take a look at some of these stocks here, though, that are popping and dropping. So lot of folks out with earnings. To the upside here, you got Deutsche Bank. They closed at 43.85. Their last trade fired off at 45.90. Looks like the numbers here at Deutsche Bank go like this. Where is it? How about that? It disappeared from my screen, so I can't tell you what the numbers in Deutsche Bank, but they are trading up. Avon Products, that's a different one. I can tell you about Avon Products. Ding Dong, AVP is the ticker symbol. They closed at 22 and a quarter. They're trading at 24.15 right now. Their numbers go like this. I believe 3 cents a share loss in Q1 versus a profit of 6 cents out there. Let me see if I can find their net income or their revenue number out here. How about that? They did net sales of $2.5 billion versus $2.58, and yet they are trading up nicely this morning. Valero, VLO is a ticker symbol. They closed at 41.20. They are trading out at 42.70. Their revenues $33.4 billion versus $35.1, and earnings per share $1.18 versus a loss last year of 78 cents. You've got Best Buy. Best Buy trading up. Best Buy closed at 24.20. They're trading right now at 25.69 out there. They're going to sell their stake in their European business to Carphone Warehouse. That's what's going on behind that. 3D Systems, Triple D out here. They closed at 35.77. They're trading at 36.63. Net income of $5.8 million versus $6.1. The prior year, $102 million in revenue versus $77. So they're having a nice revenue growth out there. BlackBerry is trading up a bit this morning. They close at 15.61. They're trading at 15.82 out there. To the downside, Nuance Communications, NUAN, getting a little hammered here this morning. They closed at 23.30. They are trading right now at 19.90 out here. Let's take a look at their revenues. For their second quarter, were $450 million versus $390. Not bad there. They did a Q2, let's see, net loss of $25.8 million out there. That was about 8 cents a share. I don't see the comparable number out here, so I can't give that to you. But they are trading down there. The leader in the clubhouse, dollar-wise, on the way down this morning. Again, their last trade firing off at $19. We'll take a look at that. You've got Anheuser-Busch. BUD is the ticker symbol, out with revenues in their first quarter of $9.1 billion versus $9.3 a year ago, and earnings per share $1.28 versus $1.04. They closed at 95.48. They're trading down a little under $3, trading out at 92.87 right now. Pitney Bowes out here. Pitney Bowes PBI is the ticker symbol. 1620 is where they closed. Last trade firing off at 14.44 out here. Their revenues, let's see, earnings per share of 33 cents versus 79 cents from a year ago. Let's see here, I don't see the top line number, but they are trading down. You've got VEO Pharmaceuticals, AVEO. They close at 7.44. They're getting it taken to the street here. Now, I don't see the numbers or any announcement on that. Some type of weaker revenue report. They closed at 7.44. Last trade just fired off at $6 out there. GlaxoSmithKline, GSK is a ticker symbol. They closed at 52.42. They're trading at 51.48 right now. Pfizer, that's the big one out here. Pfizer PFE is a ticker symbol. They closed at 30.43. Right now they're trading at 29.49. We'll see where this opens here. Looks like that may be where it opens. They're trading up off of their lows from earlier this morning. They did revenue here. Looks like their earnings per share, there's their number here. Adjusted net income, Q1 revenues, $13.5 billion in revenue versus $14.88. So everybody's struggling to hit the top line. Net income, $2.7 billion versus $1.7 billion the prior year out there. So let's start taking a look at some of these stock charts out here. Let's take a look at Nuance Technology, Nuance Communications, since they are going to be trading down this morning as the market opens. Right now, last trade firing off at 1991. Where does 1991 take us down to? Well, the last swing point low out here, most recent swing point low inside Nuance, would take you down to the trading session here on April the 19th. That low is 20.01, so we're trading below that. $19. That says that if it's going to open below that, and this is closing at 23. Now, 23.30 here last night. You can see it got up inside this gap. This thing had a big downdraft back on February 8th, 2013. 33 million shares to the downside. Looks like what Nuance Communications is going to do is take you all the way back down into the lows around 18.23, take you all the way back down to the March 18th level out there. That's assuming that it can hold that price point. So as far as the downdraft session, the low of that downdraft session was 19.51. So you're trading into that here right now. But looks like we'll see if that area will hold. But looks like it really wants to run all the way back down to the swing point lows in the lower 18 range out there. Let's go take a look at Avon Products. That is bouncing to the upside. Let's go see what Avon is doing. AVP is their ticker symbol. Now, Avon Products, this is an interesting-looking chart to say the least. If we come back all the way into the April 2nd, 2012 timeframe, so a year ago, Avon Products gapped up pretty big on big volume. That volume on that day was 65 million shares. The high that it put in was 23.38. It made a slightly higher high coming into about April the 13th time frame, and it sold off from $23 all the way down to the lows of $13.77. AVP is going to gap up this morning. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Markets are still flat out here, and it is April 30th. You know what that means, folks. Tomorrow is May Day. Tomorrow is May 1st. If we take a look at the last May Day out here, we'd come to May 1st. That is May 1st of 2012. We had the S&P 500. That's what we're looking at. If you're watching us on Tiger TV, maybe you're listening in on the radio or your mobile device at tfnn.mobi. Thank you so much for doing that. Remember, this show will stream live to your smartphone devices. Just go to the homepage of tfnn.com over on the right-hand side. Click on that button. You'll see those three little smartphone icons. You'll get this show streaming live as well. This show is archived on Channel 9. Last year, April the 29th, this is after the market made a nice little move off of the lows from April 23rd. Had a nice move up. April the 30th out here was kind of a flat trading session. Made a little bit higher high on May the 1st out here, and then we saw a move down. That move down taking us into the June 4th lows that were out there. So we saw, in essence, a full month of a retracement that went on inside the marketplace. So that was in 2012. I kind of wonder what happened in 2011. Hey, I'm glad that you asked me that question. Back here in 2011, what we saw was on April the 29th, because May 1st itself was on a Sunday. So if we just take a look at Friday's action, in this case here on April 29th, you had the market move up just slightly. That, too, was coming off of a correction that took you back into the April 18th time frame out there. You can see it actually went ahead and formed a little bit of a butterfly pattern. Let's see if it made the full 1.272 expansion out here. Oh, my goodness, how about that? It actually did. So you got your 1.272 butterfly pattern out there. On May the 2nd, made a higher high, getting up into the 1370 level out there. So that says, okay, today maybe make a higher high, maybe tomorrow even a little bit higher. And then, of course, after May 2nd, you saw a move all the way down to June the 15th when it went ahead and put in a low out there. Now, wedged in between that time period was a back-to-back-to-back solar eclipse. In this case here, we have really just the opposite. We've got a full moon. This is coming from a question in the den here. We had a full moon last week, a full moon lunar eclipse. That's going to be followed up by a new moon solar eclipse. I don't have the exact date off the top of my head, but it comes in sometime in about probably about 10 more days or so, and then that's going to be followed up by one more full moon lunar eclipse combination, just like we had back here in 2011, back to back to back. And what we saw here in the marketplace, we saw the market move up after it made the lows back in June the 16th. Market went ahead and moved up, tested the swing point high from May the 2nd. And then we saw the S&P just simply fall off the planet and to go ahead and close out into that cycle of truly sell in May and the 6-month seasonal cycle where it actually made a low back on October the 4th out there. So, is the same thing going to happen? I can't tell you what's really going to happen. What I can tell you to do is fasten your seatbelts out here. I can tell you that if you go back and you do the work and take a look at the sell in May cycle out here, you'll find some very interesting pieces of information out here. Let's go back and take a look at some of these stocks here that are popping and dropping in the market. Kind of one of the biggest reversals, not and I don't mean largest reversals that we've seen in the marketplace, but a large reversal that we've seen here from yesterday. I believe Buffalo Wild Wings were out with their numbers. BWLD is the ticker symbol, and they did total revenue of $304 million versus $251 the prior year. Yesterday, after the bell, they were trading up. Buffalo Wild Wings, they closed at $94.33. I've got the stock chart up on the screen here, and Buffalo Wild Wings is now trading down 4%. It's off $3.78. Last trade, far enough, at $90.55. So $90.55, let's go see where that is going to take us down to. $90.55 takes us into about right around here. So no swing point. I suppose we could take a look at this little spike out here from April the 3rd. 90.39 is the top of that. So you're trading just slightly above that. That's Buffalo Wild Wings. It's going to gap down this morning out here. We'll see what kind of volume is behind the move. The volume where this would likely head to on this gap down is going to be this session from February 12th. That's at 81.15 is the high, 77.35 is the low, 2.2 million shares. 877-927-6648. We'll be right back.
Well, it's always better when we're together. Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing TigerTV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
We're off to the races. So much for a flat market. We've got the Dow off 35 points right now, trading out at 14,783. S&P down 1.5, trading at 1592. Composite off 2 points. Russell 2000 down 10 cents. Google up 47. Apple up 450. Microsoft down 24 ticks. Intel off 9. Cisco off 9. The big story, though, folks, the big story is this. Hopefully you're watching on TigerTV. If you're not, we've got another island reversal pattern inside the Dow. Inside the Dow, another island reversal pattern. That's 3. That is 3, folks. Now, the trading session, is not over. So the day is yet young. But if we take a look here at Pfizer, Pfizer gaps up on April the 10th out here. That low is 29.45. Gaps up, has some decent volume, 40 million shares behind the move out here. So really not too bad. Has some follow through on April the 11th. This morning here, and they were out with earnings. The high so far intra-session is 29.44. Take a look at this island out here. This is a fairly large island. Folks, when you are making highs in the marketplace, there's just simply no way that you have this. There's only 30 components inside the Dow here. You've now got 3 island reversals, one in United Health, one in Pfizer, and the other was in Procter & Gamble out here. Now, the trading session is not over out here, but as we speak, as long as Pfizer does not trade up into 29.45 out there, you will have a island reversal pattern. Volume so far, 7.3 million shares, only 6 minutes of trading, and that's coming into this last area where it broke out, I should say, with 40.9 million shares out here. So we'll have to pay attention to this chart. Most certainly. Buffalo Wild Wings is the leader to the downside. You've got OIS, Oil States International. They are the leader in the clubhouse to the upside, up $11 and a change out here. You've got Heartware International Inc., HTWR. They are trading up 10%. Let me take a look at see what is behind this move if they've got some revenues out. $49.2 million in revenue versus 26. $12.96 million in net loss versus 18.85. So let's go take a look at Heartware International. Give me a second here to pull this up on the screen. HTWR is the ticker symbol. So they're gapping up this morning, up about 10%. Looks to have some pretty decent volume behind it. Let's go ahead and pull this stock chart, HTWR. Take a look at this, pull this back, see what it's actually trading into. Come on, Merc cursor here. So this is trading up into its most recent swing point high out here, which would take you back into January 25th, 2013. It's up just slightly. It's right at that level. The high's 94.54. You're trading 94.49 right now. That volume only 52,000 shares. So you can see a relatively illiquid stock out here. Yesterday, for example, 171,000 shares, but this morning already 186,000 shares. So looks like an A to B equals C to. It's also coming into the swing point highs out here, but it's already got volume to take that on. The swing point highs I'm looking at are October the 2nd, 2012. Let's pull this back even further, see what this is going into. So it looks like their all-time high out here takes you back. Sorry about that. Takes you back into the January 13, 2011, $99.10. So we've seen, in this case here, see if we've seen mostly breakouts here. Saw this thing breaking out nicely back here in the time frame. So the first time you saw some nice volume to the upside in this took place April 23rd, just over a month ago, just over a year ago, I should say. 944,000 shares, and it breaks out 2 days later with 1 million shares on April the 26th. Now that gap became your friend if you were following this equity out here. Let me put the red line across the screen. So let me also do that at both the price level as well as volume so we can take a look at this. So this thing moves higher with that second little breakout session on April 26th. Again, 1 million shares. Now, price came back into that area, and it came back with lighter volume. Came back on November 27th with 542,000 shares. A little doji candle out here on November the 28th with 332,000 shares, closed right inside that gap. And then what we saw was what this really created here. This was a morning star reversal configuration. It's 3 candle, which is a bullish sign out here. So you got the bullish sign of the second gap up back on April 26th. You come back and you test that area on later volume, and then you really had your bullish sign here. That bullish sign went ahead, moved prices all the way back up to a high on January 25th. That price point is what it's taking on right now, that little swing point. That's really what would be setting up your A to B equals CD. Your A point, we're going to use that doji candle low from November 28, 2012. That's your A point. The B point is going to be up here on January 25th. That's at 94.54. And in your C point of your retracement is the low of April the 5th out there. If we take a look at our retracement level, see what our B to C leg was. The 0.618 is 82.38. It got down to 81.30 out there. So a nice 0.618 retracement. Now coming off of that C point with conviction here. This sets up a run, just a 1-to-1 to a 101.05, trading at 94.62 right now. Looks like that is where Heartware International Inc. wants to move to. Let's go back and let's check in on Buffalo Wild Wings here. Let's go see what kind of volume we've got inside this equity. BWLD is the ticker symbol, trading at $91 right now. Volume so far this morning, as this gaps down, 472,000 shares out there. It is trading into this candle, which was April the 3rd. That has 826,000 shares, so it's going to have volume. Right now that is acting as a little bit of support. If this fails, and a failure would be a close below 86.60 out here, this will go ahead and move down to this high volume bar from February the 12th out at 81.15, maybe $77.35. That is on Buffalo Wild Wings. Let's take a look at, let's see, what else do we have going on out here. We'll look at movers out here. Multimedia Games, MGAM is their ticker symbol. They did $46.6 million in revenue versus 39, and net income of 9.3 versus 6.8. Let's see what MGM Multimedia Games does here. Of course, the name probably gives it away. Just maintenance of gaming machines. Okay, video lottery terminals and so forth. So that's the kind of gaming that they are in. Let's go check out their stock chart and see what they are trading into. Again, the ticker symbol is MGAM on this equity. So, and it's trading up about 21% here, MGAM. So let's go see what we've got behind this move. Nice volume behind the move out here. Give me a moment to pull this back. Had a nice sign of strength back here on January 30th. This thing gaps up with a total of 1.1 million shares. Again, so we're not looking at something that is too liquid out here. Looks like the average of maybe about 150, 200,000 shares. This thing now, it looks like it's at its all-time highs out here. Let me put this on a larger time frame. Let's put it on a weekly chart out here, and most certainly it is. So this thing is well above its highs. This thing broke out above its highs. Its original high back on March 31st, 2006 out at 1526 out here. So let's take a look at that. Broke out above this area back really with conviction on this candle right here, February the 8th out here. You can see wide-ranging candle and some nice volume behind this move. So that sets up on the weekly chart out here. Sets up a heck of an A to B equals CD pattern. Let's take a look at this because there was really no retracement here. So that A to B equals CD. This is on MGAM. This is a weekly chart. So 26.14 would be your 1-to-1, but no way. That is not going to stop it. It should head to about 29.65 or 34.11 out here on the longer-term basis. Let's go back to the daily chart on this. Volume so far this morning, 144,000 shares out here. Again, not the most liquid of stocks, but not a bad-looking stock chart as well. You can see this thing has had some nice breakouts. The first one I'm looking at takes you back to February 1st, 2012, 1.5 million shares. That gap never got tested. Breaks out again on May 3rd. That gap did get tested. That was really your buy point if you were taking a look at buying. Let's go take a look at volumes actually as it came back in there. If you were truly buying the breakout session, again, the ticker symbol we're looking at here is MGAM. And on May the 3rd, let me also do this on the bottom here. That way it makes it easier for you to follow along as you're watching. So this thing breaks out here on May 3rd, 2012, so just under a year ago. Does it with 1 million shares. Comes back and tests that breakout with 374,000 shares. 374 was going against the breakout day on May 2nd of 262, but that area ended up being tested on lighter volume a few trading sessions later. So your real key here was on June the 6th. You test, not only do you test the breakout volume that you're going against, which would be the 1 million shares, but when you can come back and you can test the actual session before where you broke from, which in this case here was May the 2nd, which had 262,000 shares. When you can do that on lighter volume, which is what this thing did here back on June the 6th with 205,000 shares, that is a beautiful thing out there. Not a hammer candle. Looks very, very close to a hammer candle, and you could pretty much trade it like one just simply because of coming back into this resistance area. But the shape is okay. Just too much of a wick here on the top of that session. But that was a nice test of a breakout. This thing breaks out again here back on January 30th, 2013. That gap here not being tested. So it's got a bunch of gaps out here. 1, 2, 3. This is going to be the fourth gap out here. So this is a little rocket ship taking off to the moon out here. So we've got the Dow right now is off 52. S&P is down 3. Composite and Russell 2000 are basically flat here right now. So we know inside the Dow, bad news, really, really bad news out here. And, you know, folks, strap on your seatbelt. We're moving into sell in May, and I can tell you we've got volume off the top. Yesterday was just, lightest volume. I think it might have been the lightest volume of the year inside the New York Stock Exchange out there. So you've got light volume on the bounce up. You're coming into sell in May. You've got volume off the top. You've got island reversal patterns out here. And, I don't know how else to put it to you, but other than what I just said out there, there are more signs of, what could end up being some very quick destruction inside the marketplace out here. In fact, if we go over and we take a look at the Dow itself, just take a look at some of the top holdings in here. So this is the entire Dow 30 here. So we got IBM, that's the number one waiting inside there. IBM, we know, gaps down with a substantial volume, 18 million shares. Does that on April 19th. You can call this some volume off of the highs. This thing did it once before back in October 17th. You had volume off of its high out here. So IBM here moving up yesterday, had some decent volume, 5.9 million shares, but you really got to take a look at the benchmark. Even that benchmark, when we just took a look at that equity MGAM out in the marketplace, the benchmark of the day that it was broke down from, in this case here in IBM, was April 18th. That had 6.4 million shares. So yesterday's move up, if you will, on 5.9 million shares. Big deal. Take a look at where the volume inside this equity has been pointing to. So IBM being the number one weighting to the downside, you got big volume there. CVX is number 2. Chevron is the number 2 weighting inside here. This has not broken down at all. Still trading up towards its high. So no real problem here in the number 2 weighting inside the Dow. If we go take a look at the number 3 weighting in there, well, let me make sure I'm getting these things in order. I don't want to just assume that. Give me a moment here to switch over. Yeah, 3M is the third weighting inside the Dow out here. So when we take a look at 3M, so the third weighting, what does that do? That gaps down with volume off of the highs out here. That was on April 25th, 9 million shares to the downside. You're trading below that. 3M is going to come all the way down to the 200-day EMA, if we want, or EMA, exponential moving average. It's at least going to come down to that level. So it's trading at 103.39. It's going to pay a visit to good old 97.57 at least. That's the 200 period EMA. What it's really going to do, it's going to come all the way back down to the January 2nd area where it broke out from, as the market did. So now number 1 and number 3 are giving you just simply bad signs out there. Absolutely. Well, let's go take a look at number 4 out here. A number 4, which is McDonald's, okay? Big Mac. So what is Big Mac doing out here? Big Mac, as we take a look at this, just one by one. Oh, Big Mac here. It's got some volume to the downside on April 19th. Big volume. 8.2 million shares out there. As this thing is bouncing up yesterday into the area where it broke down, it's doing it with 3.4 million shares against 8.2, against 5.6. Are you kidding me? Not a chance. So McDonald's, number 4. So 3 of the top 4 out here have volume to the downside. Well, let's not stop there. That would be silly to just stop there. Let's go get a better sample. Now let's go take a look at number 5 out here, United Technologies. UTX is the ticker symbol. What's United Technologies do? April 23rd, volume pushing to the downside, 6.5 million shares. That's after making a high out there with 3.9 million shares. Folks, I am Mr. Positive. I'm not Debbie Downer when it comes to any party out here, but just look at what's going on inside the Dow. Take a look at what's going on inside the market. We're coming into sell in May, folks. That begins tomorrow.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is. Folks, welcome back. Right now, the Dow is off 61 points. S&P down 4.5. Let's go down the street to Tom in Tampa. Tom, thanks for calling. Thanks for holding. How are you this morning?
Good, Steve. How you doing today?
Excellent. Excellent. Thanks for asking. Our
Good.
Euro man, tell us what you're doing and how I can help you.
Yeah, I just wanted to take a look at it there. I'm short it right here. Those interest, I guess they're going to be cutting interest rates here on Thursday. We still looking okay, you think, on this short here, Steve? Or I guess what I'm getting at, how much higher up do you think this baby could get here?
Okay, so we're going to take a look at the euro here. The euro just had a nice pop here during the last 30 minutes out here. And if we take a look at it, I'll give you a little trick here. Then you go ahead and put it on your. Now you trade this on a shorter term basis, right?
Oh yeah, absolutely.
Yeah. Okay. So take your 30-minute chart. You can do it on a different time frame as well, and take the following 4 exponential moving averages. Go put the 8 period on there, the 21 period, the 50, and the 200, and put those on there. And what you're watching for here is when the smaller one, in this case here, and to the upside, when the 8's above the 21, 21's above the 50, 50's above the 200, you've got some momentum in place here. What the euro did last night, or did here at the time frame of 5:30 this morning, I should say, came down and it tested that 200-day exponential moving average and then moved off of that. When you start seeing these things line up, to the upside, it's just telling you that there's some momentum in there. It's great. It's a great tool for understanding what's going on from a momentum standpoint. Then you can just start taking a look at patterns that it might complete out here. Patterns inside on the 30-minute chart, you take a look at retracements. That would be one area. You take a look at A to B equals CD. So retracement areas, I'd come off of the 1500 hours, so that would be 3 p.m. on April the 16th. From that high all the way down to the low here, that came in at 4:30 in the morning on April 24th. And then I draw my A to B equals CD pattern. That would be coming off of that low from 5 a.m. at 1.2970. That's your A point. Your B point is up here at 9:30, and your C point. So right now, it's already made the 1-to-1. And it's on its way to 1 to 1.272. It's right now stopping at this 0.786 area. So right now, the question that I will answer for you, if 1.3148, let's say, does not hold, the euro will should move up to at least 131.70, and then perhaps even all the way up to the 1.3205. Now, it is in the 30-minute chart. It is the beauty here is it's making a higher high with lower relative strength out here. And so, but what you've got to wait for is you've got to wait for the reversal candle. So I don't know how much room, how many ticks you're giving it on your trade or where you got in, but right now the momentum indicators are suggesting that it wants some higher price, and you're right up against that 786 level. So you don't have to stop out right now. I'm not necessarily suggesting that, but you are coming into the 0.786 level with a wide-ranging bar. And typically markets don't end on a wide-ranging bar. You know, what you'd like to see here is some smaller bars so that it just tells you that the buying pressure, is off there. But you can use these moving averages. What you really ideally want to be looking for is you want to look for this little rainbow convergence right here. If you put those moving averages on your system and you take a look at when they all come together like it did at 5:30 in the morning on April 16th, that actually is where you can use moving averages to get into a trade.
Yeah.
Alrighty?
Okay, good.
Okay, you bet. Folks,
Thanks,
stay tuned. Yep, Dow is off 67. I'll be back in just a few. If you're off to start your Tuesday, have a terrific Tuesday, and I'll look forward to seeing you in a few or seeing you in the morning. Take care, folks.
Yeah, it's always better when we're together.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.